Now we are going to see the investment decisions in business finance. This investment decision plays an important role. As a person who invests for his money, he used to think what are the scope or what are the returns he used to get for the business finance. Here we used to say the capital budgeting involves deciding which long term projects to invest is for the future growth. As I said, for a future growth, every person who invests in business used to see whether after 5 years what the profit he must get in his business. For that, the capital budgeting involves a deciding authority as it is a long term project or a short term project, the investment is for our future growth or not. Then they will see how the working capital management focuses on managing short-term assets and liabilities efficiently. The working capital management, it focuses on the managing of a short-term assets and liabilities, because in doing of the working capital management, we definitely knows whether the business which runs is in a good position or whether business is going in a short term way or a long term basis. The dividend policy determines how much profit to distribute to the shareholders versus reinvesting. The dividend policy, as I said, which it describes the profit to distribute the shareholders, whether it is used or not used. Next, we will see in the scope itself the funding decisions. Yes, of course, the funding decisions plays a very important role. As I said, equity financing, debt financing, optimal capital structure. There are three important funding decisions place. First one is equity financing. Equity financing is nothing but issuing stock which helps the capital to rise from the investors. It is called as the equity financing. Next one is the debt financing. Debt financing is nothing but borrowing money from various lenders to provide fund for them. Next one is the optimal capital structure. Optimal capital structure is nothing but it is a balancing debt and equity creates an optimal structure. The balance, how we balance the debt and equity, which shows the optimal structure of a business. And as I said, business finance is a very basically it is a continuous cycle. It gives impact, best choices, and also gives us the continuous learning, because the decision which we made today significantly impact the business of tomorrow. The decisions which are taking for as I said, if a person who likes to start a boutique, he has an idea of investing some amount to his business, but he doesn't know how to invest and how to invest in the sense how much to invest in his business. So he has to take a decision in an effective manner which gives an impact of his business tomorrow. The correct proposition of the allocation of results will give a best returns in his business for tomorrow's purchase or something like that. And the next one is the choice of future success. The choice of future success is nothing but which gives an impact that to learn and to make the best financial choices for the future success. Because the choice which we are selecting for our financial thing, for our business, which should be the apt, and it also should be at a minimal risk, so that the business can run in a good manner. And business finance is nothing but gives an continuous learning, because Business finance is an ongoing process of learning and adaptation of new term technology and whatever